Accounting lessons, income and expenditure account and balance sheet. So in this introduction, we will go through the non-trading institutions, the books maintained by non-trading institutions, which are mostly similar to other institutions or entities, but which includes journal, cash book, general ledger. Then there are membership registers, that is for non-profits, register for donations, property register and student register. These are some of the books which are maintained by the non-trading institutions. Also, the final accounts of non-trading institutions may consist of receipts and payment account, which we will see what it is, income and expenditure account and balance sheet. So about receipts and payment account. So this account shows amount that is paid in cash and actual amount received. So that is basically receipts and payments account. Receipts may be actual amount received and payments is basically the amount that is paid in cash. Receipts and payment account is a real account. So we have gone through the rules of the different types of accounts. So in that sense, receipts and payment account is a real account. Revenue or capital is recorded in this account, which may also relate to current year, subsequent year or previous year. And this account starts with opening balances in cash and bank and ends with closing balances in cash and bank. So it's merely whatever is put in cash or bank to an organization and about the expenditure incurred in cash and bank. So the opening balances will be where the account starts and the closing balances will be where the account ends. So that is about receipts and payment account. Income and expenditure account is a nominal account, which means we debit all expenses and credit all incomes. It is nothing but profit and loss account. Since non-trading institutions are non-profit institutions, we term this account as income and expenditure account. All incomes are shown on the credit side or the income side. All payments payable are shown on the expenditure side or the debit side. Now about balance sheet for non-trading entities, where we have actually capital receipts and payments which are taken to the balance sheet. Balance sheet shows positions of assets and liabilities as per the accounting equation. Capital plus liability is asset. Capital is the contribution of the owners. Liabilities is the contribution of the outsiders. So the total should equal to the assets which an organization or the entity has. Now, preparation of income and expenditure. We will go through briefly a few points. There are a lot of rules actually, but we cannot cover everything here. So we will go through a few of them and then we'll also try to illustrate with a sort of an example or an illustration where we will see how an income and expenditure is prepared and how balance sheet is prepared. Only a few transactions, not everything. So in the case of income and expenditure preparation, we say we take opening bank and cash balances to the opening balance of income and expenditure account. All revenue receipts, maybe any incomes, any dividends, anything like that, will be shown on this account. So basically all revenue receipts would be amount which comes as in the manner of equity shares or anything like that for an organization. But in the case of non-profits, that is not what exactly is the reason. But anyway, all revenue receipts will be shown on this account on the income side. However, from the amount received, future years collections as well as previous years collections will be reduced, and what will be added to actual receipt will be amount receivable at the end of the current year. Similarly, the amount received in the next year is shown under income received in advance. Next is in the preparation of balance sheet. What are some of the points which we have to keep in mind? On the opening balance in the balance sheet on the asset side, what is shown is any amount received in the previous year. On the payment side, if the opening bank balance appears, it is an overdraft balance. The account is overdrawn. This will appear as a liability on the balance sheet. Similarly, the amount received in the next year is shown under closing balance as a liability. Donations received. So what are donations received, how exactly it is done. It will be shown on the liability side as a fund, maybe donations for scholarships, etc. In the case of fixed asset sale, the asset's book value is reduced from the asset concerned in the balance sheet. So these are some of the things which actually an accountant goes through for preparation of balance sheet. Now let us see how we prepare income and expenditure account from an abstract of cash book which is given. So you know cash book, wherever there are debit entries, which means it is income or the cash is coming to the organization, payments are actually credited in the cash book. So that is basically as per the cash, which is a real account. Okay. Now the receipts are membership subscription. There is a receipt of 5,000 rupees. So how we do it in income and expenditure? We say it is an income. It is an expenditure and income because debit entry is first and credit entry is next. Expenditure is a debit entry. Income is a credit entry here in income and expenditure account. So membership subscription is 5,000 is actually on the credit side. Similarly to members admission fee, which is 300, which has to be recorded. Now that is under stationery consumed. We will explain about it in a while. Payments where we have by tournament expenses 700 is accounted for, where we have bat and ball written off as purchases because it's a payment. Tournament expenses is an expense incurred because we have given cash of 700 rupees. So that is basically as part of a bat and ball written off, where we have an opening balance for bat and ball, it is 1,500. So which is recorded as a debit entry, opening stock. We actually have spent 700, so that is deducted, where by adding purchases we deduct it. So 1,500 minus 7, we actually added 1,500 plus 700 is 2,200. 50% of bat and ball is written off. That means there is 1,100, which is basically what is the debit amount or the income. Or basically the expense actually of the income and expenditure account. Similarly, for telephone, we have given 50 rupees, which is credited, which is a payment done from the cash book. So that is recorded as an expenditure, which is to telephone, which is 50 rupees. So likewise, all the expenses we actually say it will be on the debit side of the income and expenditure account, which is an expenditure, and all the incomes will be on the income side, which is on the credit side of the income and expenditure account, which is actually the income. Totals should tally, that is also a rule. Now if we get income and expenditure account, how will we do the balance sheet? There are two forms of balance sheet. One is condensed and one is the worksheet, which is a work in progress actually. So here what happens is that if you go take a look at the income and expenditure account, income is in excess of expenditure, which actually means excess of income over expenditure is transferred to the capital fund, which is 2375 rupees. So if you really see in the capital fund, it is actually transferred to capital fund 2375. Now the capital fund again is because of several reasons. One is cash at bank, which is 3,000. Stock of bat and ball stationery. Stock of bat and ball, which is 1,500. Which is the opening stock. If you actually see bat and ball, which is 1,500. Stationery, there is 200. Stationery, which is 200, which are the opening balances. And subscriptions due, which is subscriptions due for previous year, which is 500. So if you add all of that, it is 5,200. If you also want a worksheet aspect to this, capital fund, it is 5,200. Excess of income over expenditure is 2375, which is on the debit side of the worksheet. Assets, cash at bank is 3,000 and bank lodgement which is 2,500. Stock of bat and ball, stationery, everything adds up to 7,075, which is tallied actually. So this is actually worksheet, which is again a work in progress. In balance sheet condensed, we actually list down liabilities and the assets they have to tally. Thank you.